an inverse head and shoulders would be. So again, this is educational. This isn't to say that we're going to have this happen. I'm going to go through what to look for in an inverse head and shoulders. So inverse head and shoulders, you want to map out your support level. You want to map out your resistance. On inverse, your resistance is your neckline. On a normal head and shoulders, your neck is actually your support. And then what you're looking for is price obviously rejects down, comes roughly into that 50% level of your support. So in around that level, that's where you're normally going to see your shoulders form. And then you've got a retest of your resistance, strong rejection down, creating, for us, it created a double bottom here. And then now, like I mentioned earlier, the 88K is really the resistance level. So if we get a move up into 88K, I would expect a rejection. I'm not expecting a huge rejection, but 88K to 80K, I think is on the cards. If that did happen and Bitcoin catches a bid between 82 and 80K, if it catches a bid there and starts rallying up, it will create this inverse head and shoulders bullish pattern. And then your target is obviously going to be from the low to the neckline. Replicate that, and then you've got your trade. So you're going to wait for breakout, going to get into the retest. Don't always expect the retest to happen straight away. Don't get carried away and FOMO in. If you start to see this, you missed your entry. And don't start FOMOing. I wouldn't start FOMOing here. There's a good chance, 94, we hit 94, then we come down and up, something like that. So don't get scared that you've missed your entry if that happens. I think 94, 95 is also going to be a huge resistance level for Bitcoin, and that could send us right down into our entry. And then you might, we're looking at, if this was to play out, that level is 102-ish, which is also a massive level for Bitcoin. You can see the resistance we have at 102. So that would be a good trade. We're going to look at the opposite now. Yeah, right here at the top. So the one that we just went through, the inverse on Bitcoin, that is a bit of a projection, that something that might possibly happen. This one has already played out, so we can look at it a bit deeper on how you take entry on that. So when I'm drawing, I personally, you don't have to, I personally like my head and shoulders to be a clean horizontal support and a clean horizontal resistance. I don't like slanted necklines. I just prefer to trade. I just find them a bit more reliable if they're here. And you don't have to. I've drawn this for demonstration purposes, very clean, but what it actually looks like is the head is over here. The shoulders over here, and this shoulder's over here. So it doesn't have to be perfectly lined up, but basically this is the type of pattern. If you can kind of get rid of the noise and just kind of look for the pattern, this is what it looks like. We've had this break up above support. We came down, tested the neckline as support, and then we got a strong push high to an all-time high or a high, local high at 824. And then a very fast, aggressive sell-off, caught support back on the neckline, got a bounce, and back up. This is the 50% level here, this little dotted white line. And you can see it's multiple times, even on the push up, it was resistance. it was our left shoulder. It also acted as resistance here, resistance here. It got tested as support, and then it was resistance here. So this is the right shoulder over here, and then we broke down. And this is what you want to see when the neckline gets broken to have more confidence in the trade, is a candle that looks like this. You want the neckline to get broken and momentum. You want a lot of momentum to show in that candle. So break the neck with momentum, and your entry is going to be on the neckline. So you're going to wait for your price to come back in. You're not going to chase. And I'm sure, even myself, I'd be tempted to chase this short, thinking that, the neckline's broke, it's going to go to zero, I'm going to short it on the next retrace. Maybe I short it here. But price does come back up to the neckline. And where you take your stop loss, that's going to come down to your trading style. Like if you use SMC, you had this drop down, push up, and then this there's a period of consolidation here. This is supply zone, so you might want to put your stop loss above the supply zone. If you're going to go that high, you might want to go above 50%. But again, it's going to drastically eat into your risk reward. But if we zoom into the 15-minute chart, I personally would look for a smaller supply zone just to get the risk reward up. So that's what I've done here. You've got, if you watch the supply and demand video, you've got this is supply, where price comes down, has no bounce at all, just consolidates. So price comes down, consolidates, chops around, and then eventually, I guess you're going to have the real supply zone is here. So I personally use the wicks just for safety, and include the high and the low and draw the box around this area. And then you want, same idea, you want this box to be broken with momentum, which it is, a lot of momentum on the sell side, and then it continued to break the neck. So drawing a box around this, you've also got a pivot right here, this one candle, and then you had an engulfing candle straight after, so you do have a pivot right there. That's getting very nitty gritty, but you want I would want my stop loss above that. Maybe if you're confident, you could take a second DCA on the pivot, but for me, I'm just looking to enter on the neckline. And you can see how long it took here for it to hit. So it broke right here, and we didn't get triggered in. It took 18 days for that actually to play out. And didn't quite make the pivot, but came into the supply zone that I had marked out there, and then rejected off the supply zone. And then our take profit, we're going to take profit basically the distance from the top of the head, which is right here. You can clone that, and then you put it on your neckline, and that's going to be your profit target. So bit of a swing trade there on that, but it is a macro head and shoulders on the on the daily chart.